Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 6th of September. It's been another week of steady progress. This is despite concerns around Hurricane Ida, which is obviously having an impact in the US and likely to result in some economic fallout as well. But generally speaking, the markets have been making progress after the balanced rhetoric we heard from Federal Reserve Chairman Jerome Powell last week at Jackson Hole. It's enough to basically assuage investors that there is economic growth, but there's no signs of overheating at the moment. And indeed, the S&P 500 and Nasdaq have continued to hit fresh record highs. That's despite there still being some overhang by potentially slowing Chinese economy, as well as increased China regulation. Although another bright spot has come in the form of the UK's very own FTSE 250, traditionally seen as a more domestically focused index. It actually hit a record high earlier in the week and currently stands up around 18.4% in the year to date. Indeed, in terms of year to date figures, the Dow Jones is now up 15.8%, the S&P 500 up 20.8%, the Nasdaq up 19%, and the FTSE 100 up 11%. Turning to next week, there's a few companies reporting to keep an eye out for. The first one, half-year numbers from William Morrisons Supermarket. This is a company, of course, which is likely to be taken over by the US firm Clayton, Dubilier and Rice. So the promotion to the FTSE 100 that was announced earlier in the week could actually be fairly short-lived. In terms of the numbers themselves, one of the things to look out for Morrisons, apart from the obvious like-for-like sales growth, is how the online business is doing. It's a rather smaller event than some of its competitors, which means in percentage terms there's more room for growth, and certainly the 52% share price jump over the last year obviously has been bolstered by that the various bidding approaches the company has seen. There are also full year numbers from the soft furnishing companies. Dunelm had a pretty good pandemic as people were looking around their homes deciding to replace a number of soft furnishing. Obviously, what's now happened is we've got stores open as well, so you've got the dual impact of online sales as well as stores. The pre-tax profit figure is expected to come in somewhere around £150 million, and you can expect an update on the dividend situation as well. Despite all that, the shares are down 10% over the last year, Dunelm shares, but to put that into perspective, if you take a 3-year view, the shares are up 150%. Finally, and rather differently from Dunelm, we're going to have a trading statement from the fashion retailer Ted Baker. Although the shares are up 33% over the last year, that's something of a bounce at the bottom, because if you look back again over a 3-year view, the shares are down by 90%. It's seen as something of a recovery play, obviously, put a big restructuring plan in place in 2020. So being a trading statement, their current retailing performance will very much be the focus of investor attention. Thank you for watching. Have a great week.